Hello, my name is Derika Isako and you're watching InstaForex News. The recent falling of the Japanese yen is sure to have finished. Just a few days ago, the currency of Japan was undergoing a decreasing pressure when its dynamics was affected by the growing evidences of economic recovery and talkings about the interest rates increase by other central banks. The profitability difference rose versus Japan and the yen plunked to 8-month low against the US dollar. Though the events of the current week can change the situation, first of all, the yen is becoming a shelter currency again as the debt crisis in Greece continues to demonstrate the signs of expansion in other countries of the region. The worries on the market have strengthened during the recent years, and the investors' tendency to risk has become weaker. This was the result of assessments by Standard & Poor's, which on Wednesday lowered the credit rating of Spain after reducing the ratings of Portugal and Greece on Tuesday. As the financial conditions in the euro area keep worsening and the euro is under the threat of sinking, the yen is gathering popularity again. Secondly, the Bank of Japan can also bring good news after the regular meeting on the monetary policy. In spite of the recent request of the politicians to maintain the softening of fiscal and even monetary policy, the latest economic data demonstrates that the economy of Japan is likely to start improving. Although the Bank of Japan is expected to hold the interest rates, the increase of the economic growth focus and the rise of consumer prices will denote that it is unlikely to dwell upon the issue of monetary policy softening on this stage, regardless of the political pressure from the governing Democratic Party of Japan. Such correction of the monetary policy outlook of the Bank of Japan can go in line with lowering of expectations according to the policy of the U.S. Federal Reserve System. Though the market was not expecting the U.S. FRS to increase the interest rates on the meeting, which was held on Wednesday, there still were assumptions that the FRS could refrain from its mute position to hold the interest rate at the current level for an expanded period of time. As a result, the FRS has not only refused from its course concerning the rates. On the U.S. financial markets, the chances of the interest rates enlargement this year are estimated lower, taking into account the ascending crisis in the Eurozone. The third support resource for the yen will possibly be China. The People's Bank of China spent the most part of the month gradually tightening the monetary conditions in order to prevent the formation of a bubble on the Chinese real estate market. Concerns about the impact on the overall economic growth are likely to result in the weak dynamics of the index Shanghai Composite, which was lagging behind the majority of other world stock indices during the past few weeks. Moreover, the policy stiffening has also found reflection in itemization of the talks that the People's Bank of China is approaching the moment of the yuan revaluation. This step will be another reason for the yen purchase. Considering the fact of the possible yen uprise, we should take into account such factor as the investors of Japan. The recent data show a high demand of the Japanese investors in foreign bonds, which is caused by the global economic recovery. Though it is still unclear whether this negative outflow of yen funds from the country will start to suffer amid the increasing fears in reference to the euro area events. Keep on top of the latest developments with InstaForex company and have a nice day.